Hi everyone, in this video we are going to discuss about the restrictions on allowability of an expenditure under section 14A. What does actually section 14A means? It talks about the expenditure incurred in relation to an exempt income which is not allowed as a deduction while computing income under any of the 5 heads of income. Who is empowered here? The assessing officer is empowered to determine the amount of expenditure in relation to such income which does not form part of the total income. Okay, who will suggest the method of determining the expenditure? The CBDT will do it. The method of determining the expenditure in relation to exempt income is to be prescribed by CBDT for the purpose of disallowance of such expenditure under section 14A. Such method should be adopted by the assessing officer in the following cases: when if the assessing officer is not satisfied with the correctness of the claim of the assessee having regard to the accounts of the assessee. He has checked the accounts of the assessee and comes to a conclusion or decision, or he is not satisfied with the correctness of the claim. Or it is an or when an assessee claims that no expenditure has been incurred by him in relation to income which does not form part of total income. He says that no expenditure, I have not incurred any expenditure in relation to the income which does not form part of total income. Then Rule8D lays down the method for determining the amount of expenditure in relation to income not includable in total income. Section says that this has to be disallowed, which will say the computation Rule8D. Rule8D says the method. Okay. What is the method? If the assessing officer having regard to the accounts of the assessee of a previous year is not satisfied with the correctness of the claim of expenditure by the assessee, or the claim made by the assessee that no expenditure has been incurred in relation to such exempt income for such previous year, he shall determine the amount of expenditure in relation to such total income, such income, in the manner provided hereunder. What is the manner? This is very important. So whenever you get a question on 14A is untouched area, right? So whenever you get a question on this area, you have to write expenditure is to be disallowed. Expenditure in relation to earning a exempt income is to be disallowed. It's not allowed as a deduction. Okay, then you have to quote Rule8D. Okay, 14A and Rule8D goes hand to hand. Okay, then you have to quote this provision: the expenditure in relation to income not forming part of total income shall be the aggregate of the following. Which means you have to add two things. What are two things? The amount of expenditure directly relating to the income which does not form part of total income. I have incurred some expenditure which is directly linked with earning an exempt income. For example, it could be the interest. Okay, I have some agricultural activity. Agricultural income is exempt, right? For that I have taken some loan. Okay, so that loan I am paying some interest. This is directly attributable to the income, exempt income, right? So this is to be not to be allowed as a deduction. And an amount equal to the 1% of the annual average of the monthly average of the opening and closing balances of the value of investment income which does not form part of total income, which simply means I have invested some amount for earning the exempt income, right? On that investment, I should calculate first the monthly averages. Then for that monthly averages, I will calculate the annual average. For that annual average, I will apply 1%. We'll see this as an example. Okay. Then, however, the amount referred to in clause 1 and clause 2 shall not exceed the amount of total expenditure claimed by the assessee. This should not exceed the amount claimed by the assessee. Expenditure, okay, this is an important point. Okay, here again, expenditure incurred during a previous year, say 22-23, in relation to an exempt income would be disallowed while computing the income of that previous year by applying the provisions of section 14A, even though such income has not accrued or arisen or has not been received during this previous year. I have not earned such income current period, but I have claimed that relevant expenditure. Then the assessing officer has a right to disallow such expenditure. Okay. You cannot say that I have not shown the exempt income. Why are you disallowing this? No. Even though you are not showing the exempt income, the expenditure in relation to the exempt income, if you have claimed, then such expenditure shall not be allowed as a deduction or shall be reversed by the assessing officer. Okay. Disallowance under section 14A is only with respect to an expenditure which is already claimed to be a deduction. If a taxpayer has not claimed any deduction at all, there cannot be a question of disallowance. See, I have not claimed any expenditure, then you cannot disallow anything. Okay. For the purpose of Rule 8D, only those investments relating to the exempt income should be considered for the average and not the entire investment. I may have some investments whose income is taxable, okay? Then that investment should not be should not be taken for computing the averages. Then let's take an illustration, okay? This should solve all your queries. So Mr. A has taken a loan of rupees 15 lakhs on Jan 2023 at 10% for financial year 2022-23. Therefore, his interest expenditure for this loan would have been how much? 15 lakhs into 10% for 3 months. 37,500. This is a directly attributable expenditure. Right. Given monthly closing balances of investment, Jan, he has 10 lakhs, 12.5 lakhs in February, and March he is having 15 lakhs of investment closing balances. Then I should calculate the average. So it is, I've taken the loan only at Jan. So it is assumed to be, I'm going to start investment from January. So monthly averages will be for Jan, it will be 0 plus 10 lakhs by 2, which is equal to 5 lakhs. February it is 10 plus 12.5 by 2, it is 11.25 lakhs. And March 12.5 plus 15 by 2, 13.75 lakhs. So annual averages would be 5 plus 11.25 plus 13.75. How many months? 3 months is equal to 10 lakhs. So I have to do, then first I have calculated what is the value of investment and then use the month. I've known the closing balances of investment, then I've calculated the monthly averages, then now I'm calculating the annual average. The next step is to calculate 1% of the annual average, which is nothing but 10,000. So I have to do an aggregate now, right? The expenditure in relation to income not forming part of total income shall be the aggregate of the following. Directly attributable is 37,500 and 1% of annual average of investments is 10,000. Total amount as per Rule 8D is 47,500. So now, if the assessee claims an expenditure of 50,000, then 47,500 would be disallowed. Okay, that is not allowed as deduction. Or now, if he claims only an expenditure to the extent of 30,000, then the entire 30,000 will be disallowed, and I will not disallow 47,500 because the amount referred to in clause 1 and clause 2 shall not exceed the total expenditure claimed by the assessee. I think with this you will be clear about the section 14A read with Rule 8D. Thank you.